Hi there, welcome to Kneppy Invest and welcome to the first day of November, which also happens to be the first day of the last month of spring. Also, the day after our taxes are due and also the day after Halloween. And also, with only 40 minutes left of trading today, the last trading day of the week. And that always makes me a little bit sad. Now, just looking at the indices performance so far today, I'm surprised they're not down by more. XJO down 0.58%. Maybe mining has been a saving grace for us today. Resource up 0.54%. I did expect our markets to be down, or our indices to be down about 1%. So XJO, XAO, maybe not the XSO. Definitely expected tech to be weak because NASDAQ was down, if I remember correctly, NASDAQ was down 2.44%. Dow Jones down 0.9%. So the weakness in the American markets really hasn't translated to our markets overall anyway. I'm pretty sure some company share prices are down a fair bit today, but overall the markets handled it fairly well. Australian markets have handled it fairly well. Okay, so what I'm going to be talking about in today's video, go through the ASX Today, the best performing sectors, indices, and also companies. Have a look at the top 5 stocks of the day. And I have included one non-ASX company in this list. I'll talk about that company and why I've included that company in today's list. And then if I have any time after I've done the top 5 stocks of the day, I'll have a look at some of your comments. Now, in past videos, I've had a look at the earnings report calendar in America or for America via the NASDAQ. Also had a look at trading economics and also capital breathe. I might skip those, maybe, but earnings report, probably the most important thing there is Amazon and Apple reported this morning. Amazon looked pretty good. I liked it. I'm a shareholder of both. And in after hours trading, share price of that company was up 6%. Now, for Microsoft and Meta, both of those companies actually beat expectations and by quite a bit, but it was based off some of their forecasts why the share price is down. For Microsoft, it was based off a bit of a softening in their growth in cloud, if I remember correctly. Instead of 34%, they're looking at growth of 31 to 32%. Share price dropped 6% just because of that. And I believe Meta Platform share price was down because of an increase in spending, capital expenditure. And I have heard explanations. The whole reason why NASDAQ was down by 2.94% was because of Microsoft and Meta. That is it. So look out for, I think Berkshire Hathaway reports tomorrow morning and a few oil companies, Chevron and Mobil. I could be mistaken. In fact, why not just look at it? Why not do that? So let's have a look. Friday, Berkshire Hathaway, ExxonMobil, and Chevron. And that's probably about it. And then we go to next week, and I haven't even had a look at next week. Palantir reports next Monday. Anyway, trading economics, briefly go through this. There was some sort, Australian producer price inflation beats estimates, China manufacturing returns to growth, and oil rises on Iran strike reports. Japanese shares plunge amid Wall Street losses. Nothing of massive note there, unless you're Indonesian and you're liking the fact that Indonesian inflation rates are at 3-year lows of 1.71%. That is quite low. And I'm going to go skip Capital Brief because I did have a quick look at that before start recording, and there was really nothing in that. Just a few companies releasing their AGMs. And what I'm going to show you right now is how less busy today is compared to yesterday, just by looking at the amount of announcements, price-sensitive announcements that have been released. So this is CommSec. I love this website or this platform apart from how slow some of these documents open. So today, Friday, the 1st of November, 94 price-sensitive events, and a lot of these are just trading halts. For instance, just after opening and just before opening, quite a few trading halts, and a lot of these were just capital raisings. In fact, look at this. Pause in trading halts. Structural monitoring systems reported outlook update, financial guidance, and outlook update. In fact, I did not have a look at that, and I'm pretty sure they went into trading halt anyway to do a capital raising. And yesterday, so 94 events today. Yesterday, price-sensitive announcements, 673 on top of 416 on Wednesday and 267 events on Tuesday. Whole reason behind that is a lot of these smaller companies wait to the last minute to release their Appendix 4Cs or 5Bs. Even if you look at all the announcements, non-price sensitive and price sensitive, today we've seen 376. Well, that's not right. It's not 565 yesterday. I can almost guarantee you it was 1,000. So this is another little bug. And yeah, so it went down. So we had price sensitive announcements yesterday of 600. And then when you click off the little filter, market sensitive, it actually goes down, which is an impossibility. I'm pretty sure it was well over 1,000 announcements released yesterday. But for some reason, CommSec website is a little bit buggy. That's an impossibility. So let's just see if this works. Now, for some reason, it's buggy. But trust me, in fact, I'm just going to refresh it. That really annoys me. What's wrong, though? I can guarantee you it's over 1,000 announcements. Even, there it is, 1,238 events released yesterday, 470 today, 930 on a Wednesday. So you could just compare today versus yesterday and why yesterday was a really busy day for me and today not so much. Okay, so let's get to the ASX today. So about 35 minutes left of trading today and this week. And as I mentioned, I'm a little bit surprised the markets are not down by a little bit more because of what happened on Wall Street overnight. NASDAQ down 2.94%. 2.44%, sorry. Dow Jones down 0.9%. I'm wondering if we've had a bit of a rally. Oh, a little bit, yeah. So a little bit of a rally today. Not significant, but that's a good sign moving forward. Now, let's have a look at the different sectors and indices. Energy up. So we do know that oil was up. So that would be a good thing for Karoon, Santos, and I'm assuming, what's the other one? Woodside. So let's have a quick look at those three companies. Just see if that has translated. So Karoon up, well, slightly. Santos up slightly. And Woodside up. Yeah, so they're all having a pretty good day. What else is in energy that could have explained this? AGL maybe? Origin? Let's have a look by market cap. Oh, I forgot about the coal companies, Yancoal, Whitehaven. They've had a good day as well. And uranium, yeah. In fact, Origin and what's the other one? AGL are not considered energy companies, which is interesting. Materials up slightly, and then a sea of red, including healthcare and financials down by over 1%. So probably not a good day for the banks, CSL, which means the biggest companies on the ASX, which means ASX 20 down 0.64%. So let's have a look at the ASX 20. I'm assuming about 5 companies up, 15 down. 9 up, 11 down, which probably means the companies that have fallen have fallen by a lot. Well, I do have that wrong way around. Or the bigger companies on the ASX have fallen a fair bit. So we're talking about, again, the banks, CSL, maybe BHP. So let's have a look by market cap. See if that rings out true. Yes. In fact, out of the, the 8 biggest companies on the ASX, 7 of them are down. The only one up is BHP. So CBA down 0.93%, CSL down 1.7%, NAB down 1.88%, and Macquarie Group, which is in my top 5 stocks of the day, down 2.87%. Interesting day. Okay, so let's go to the best and worst performing companies. See if I've missed anything today. And not much. Looking at the announcements, it wasn't 95 price-sensitive announcements, and many of those were just junk, trading halts, that sort of thing. So a company called Merino & Co. up 60.4% on fairly low turnover, a consumer cyclical company. I have never heard of this company. Do they have something to do with sheep? No idea. I've never heard of this company. And I think there's a reason why I've never heard of this company. They just listed. There you go. Merino MNC, which is Mid-North Coast of New South Wales, MNC, the greatest place in the world. So that features places like Taree, Port Macquarie, Kempsey, Coffs Harbour maybe. And of course, the reason I say that is the greatest place in the world is because that's where I grew up. And I've also been told by someone in the United States that area has the best climate in the world. And when I thought about it, I went, yeah, It does have a really good climate. And there's various reasons why I would say that, and this person said it. Anyway, so Merino and Co., a new listing on the ASX, which we're not seeing many of these. Now, typically what I do is I go to this site called Small Caps and just have a look at the listings, and this may not be working anymore because Merino is not popping up here. So maybe I'm going to have to change this and find another site. They've got some upcoming IPOs, but there's nothing here. The last one was Metric Real Estate Multi-Strategy Fund on the 16th of October, and then nothing for 3 months. I find that hard to believe. I might have to find a new site to look at. ASX IPOs. I like to look at not only upcoming, but also the ones that have just listed. And that was my favorite one. I'm going to have to find a new one. There you go. Anyway, so let's go back to this Merino and Co. What do they do? That's the other thing. I used to have this site where you could actually look at the IPO, look at all the decrements, see what they do just in the one website, but they're no longer around. And we could look at the prospectus. I would love for this company to release a presentation by now. Typically what I do is have a look at a company's prospectus because you get a lot of information in a prospectus. They released this on the 28th, should have been the day before they first started trading, or 2 days before they started trading. Share price, they probably listed at about 20 cents. It opened at 20.5 cents. So it's already doubled. That's interesting in itself. Now, the reason I love, and I'm shocked this is open already, Merino and Co., maybe clothing. You get a lot of information about companies, not only companies, but about the sector. So for instance, if you look at the table of contents, you get a letter from the chairman, details of offer, company overview, page 13, industry overview, page 26, risk factors, page 27, financial information, page 47. So for instance, I'm going to go to page 13 and also page 47. I just want to care at this point what this company does. So it looks like maybe that's not page 13. That is definitely not page 13's. Here we go, company overview. Oh, that's actually the wrong, haven't started at the right page. Established in 2013, Merino Co. is branded lifestyle clothing accessories company based in Perth in West Australia. The company manufactures, markets and sells wool apparel and accessories. Well, makes sense, predominantly featuring fine merino wool. So you can have a corporate structure or capital structure of the company, some shareholders. It looks like it's Chinese based, not based, but a lot of Chinese interest in this company just based off the shareholders here. Which is interesting in itself. And there we go, Merino & Co. And looks like a subsidiary Merino Snug, which is Shanghai wool products. Okay, that does make sense. And they go through the company history, products, scarves, shawls, sweaters, coats, throws, miscellaneous nightwear or knitwear, not nightwear. Maybe they also do knitwear or nightwear. And the other thing I want to look at is the financials. And because the pages are way out of whack with this document, I'm just going to have to scroll through this, try to find it. Here we go. I just want to see if they're profitable. Now, a lot of times they won't be profitable because the whole reason they list is to gain access to more money. So capital raisings, that sort of thing. That's one of the reasons to list. But another reason companies list is they can be profitable, but they want to increase their growth. And to increase their growth, they list on the market, get some little bit more money coming in the door. Or another reason they might list is some of the shareholders want to sell out. They want to take the profits, that sort of thing. Anyway, so revenue. This is all over the place. Got year ended 2022, year ended 2023, then 6 months, December 2023. So revenue of $7.5 million in 2023. Nice growth from the previous year. And the company is slightly profitable. When I say slightly, I'm talking about about $300,000 to $400,000. So the company is profitable. And are they cash flow positive? No, they are not cash flow positive. So they are burning through cash. And I'd say they don't have much cash or did not have much cash. And that's one of the reasons they listed here. They had less than $500,000 of cash at the end of last financial year. Anyway, so a new listing on the ASX, and typically what I do is I just put it into TradingView, which there it is, Merino Co. Now, there was a company with this particular ticker code on the ASX up until late 2019. So, unfortunately, I just hate this, TradingView. They keep the same ticker code. They just assume it's the same company when it's not. So that's actually is a bit annoying, bit of an annoyance. And I'm putting it into my IPO watch list. Okay, so let's move on. I spent way too much time on a company called Merino & Co., a new listing on the ASX. But I do think we have to pay attention to these companies. Markup of the company, even though share price has risen 60%, is $22.56 million. That's what I'm going to talk about when it comes to top gainers by percentage change. I'm not seeing anything here of interest at all. Very low turnover. Very low turnover, except from Pullback Dragon, but I'll move on from that company. And not many of companies of interest here. So let's turn attention to by market cap. So Mount Gibson, PointsBet. I did notice PointsBet and BetMakers both up a fair bit today. Is this a lead into Melbourne Cup? The other thing I also point out, PointsBet chart does look intriguing. Now, the non-adjusted chart, or even the non-adjusted chart looks interesting right now. But if you do adjust it because of capital returns to their shareholders, this chart has been looking interesting for a while, and it's really taken off. Some really big volume coming through in September, and even the last few trading days, some really nice volume. So PointsBet chart looks really good. What about the other one, BetMakers? Now, both these companies released their pennies 4C, and neither of these quarterly reports drew me in to the extent that I would even think about taking a position in these companies. And the only reason I would is just the chart. And PointsBet looks better than BetMakers. Nice volume coming in today for BetMakers. So what's going on with these two companies? Is it just Melbourne Cup? I doubt it. That seems too simplistic. SKS up, finally. Been waiting for that company share price to go up. It's been suppressed for a little bit of time. Not sure what's been happening. It's been going sideways. There it is, going sideways. And they released another nice little, I think it was a presentation. Everything's moving really good for this company. There's nothing to complain about. The only thing to complain about maybe was share price doing nothing over the past month. And today, finally, we've seen the share price rise, which probably shows you that the selling being done over the past month is just those shareholders maybe getting sick. Share price going sideways, I'm getting sick. And it's just funny. You can just see there's no volatility in the last month, and then all of a sudden volatility just explodes today. And that's what happens. And that's why some people use Bollinger Bands, because Bollinger Bands, you can see the volatility. And then when you see the Bollinger Bands really squeeze up, that's lowering volatility, and then it just explodes. And this is what they're looking for. Wouldn't be surprised to see some people take a position in this company just because of this particular chart and what's happened today on good volume as well. And what else do we have here? That's about it. Because again, nothing much. Nothing much happening today. Fairly boring, which I like it after yesterday. Now let's have a look at the top losers today. And again, look at the turnover. So low, such low turnover. Coda, I'm going to have a quick look at Coda. This was, I wouldn't say a market darling, but the share price or the chart looked pretty good maybe a few years ago, and now it looks ugly. So not even a few years ago, 2023, it looked pretty good. Share price was on a beautiful run. You can just see it turning over, the share price. Look at the highs. Look at each successive high, and then eventually, back in October 2023, that high was lower than the previous high, and then each low after, or each high after that was lower than the previous one. That's a definition of a change in a trend, and the share price has definitely moved into a down trend. Not sure why share price has dropped from 34 cents to 13 cents. Is there value? Not sure, but the company did release a few good quality results a few years ago. Maybe that's why. And what else do we have here? Nothing of note. Fluence down a fair bit, but nothing of interest. Now let's have a look by market cap. Okay, so we have a company called AFT Pharmaceuticals, share price down 10%. That would be on a trading update the company released. Now, shares in this company are almost so illiquid that there's no point talking about it. I'm just going to have a quick look at this company, AFP. It's only down 3% now. I was going to have a look at the course of sales. Yeah. So there was some trading on open because they released a trading update. It was negative. And that was it for the next 5 hours. No trading until a few minutes ago, 15 minutes ago, when someone decided to buy some shares, and now the share price is only down 3%. Interesting. Not sure why. This is also traded on the New Zealand Stock Exchange. It's a New Zealand-based company. I'm not sure if it's also illiquidly traded on the New Zealand Stock Exchange. This company has been profitable, and they've also been giving their shareholders a dividend. They're also growing. It's a growing company, but illiquidly traded. And there's Titomic, probably because the share price has risen a lot. Few silver companies would be surprised to see here because silver did have a bit of a dip. So we have Unico Silver, Andean Silver. What's the other one? Sun Silver, not there. And a few companies releasing negative Appendix 4Cs. Max 7, Fluence, Intelligent Monitoring Systems or Group, down again, 8.87%. In fact, this chart is going to look interesting. I think the buzz has come out of this company's share price. Although in saying that, there's been a little bit of buying today. Share price fell down to about 53 cents. So we have seen a bit of buying and very big volume coming through today. So maybe the floor is now in for Intelligent Monitoring Group after a negative Appendix 4C the company did release. Okay, so let's get to the top 5 stocks of the day. And we'll start off with the company that is not listed on the ASX, and that company is Estee Lauder. I can almost guarantee you I've never used Estee Lauder products. I'm pretty sure skin products. Maybe they do bags. Like Estee Lauder. Do they do bags? No, I don't think so. I actually don't know. I'm going to Google Estee Lauder. Skincare? Yeah. Do they do bags? What's a big bag company? So I'll just say maybe the Estee Lauder company. So there's more than one. Okay, so we're talking about a multinational cosmetics company, marketer of makeup, skincare, perfume, and hair products. So not bags. I'm probably thinking of another company. Who makes those really expensive bags? Prada. That's it. Maybe that's what I'm thinking of. Anyway, so Estee Lauder. I think this is famous because the Lauder family, in fact, there's a Google page for Lauder family. This used to be one of the richest families in the world, I believe. Maybe I'm thinking of someone else, but I'm pretty sure. Yeah, pretty sure. Anyway, the whole reason I'm talking about Estee Lauder is because overnight their share price dropped 20%. Yes, 20%, which is a record for this company. Massive volume coming through. What they did is they actually pulled their guidance. And that is the reason some people are giving why the share price did drop. If you don't believe me, I just Googled it. So all I did was Google Estee Lauder. Why did the share price drop heaps? Stock, suppose. Maybe just news. Why Estee Lauder stock was tumbling today? Motley Fool. Estee Lauder stock dives on China warning, dividend cut, withdrawn outlook. So maybe there's a little bit more than just a withdrawn outlook. So dividend cut and China warning. Estee Lauder stock is dropping on disappointing guidance and cut dividend. I do like that better. Disappointing guidance. Let's have a look to see what Motley Fool says. This is not the Australian Motley Fool. This would be the American Motley Fool. So Estee Lauder's revenue fell in its first quarter and it saw an accelerating decline in the second quarter. The company cut its dividend from 66 cents to 35 cents. Woof. It also pulled its guidance for the full year due to uncertainty in China and Asia travel retail. Hence, the share price drops 21%, 20.9%. I did have a look at this chart when I saw this news, and I've noticed the share price of this company has dropped almost, from $360 to less than $70 in the past 3 years. Is there value now? Is the market overreacting? possibly. But I wouldn't count on it because the share price in a downtrend, they have just released some really negative news, but maybe some people come in looking for seeing some value. Markup, it's only 24.7 billion. Thought it was a little bit more than that. I'm thinking of another company when I'm thinking at the Lauder family. I'm pretty sure there's another company I'm thinking of that has a really high market cap, and the family is one of the richest families in the world. Anyway, so that's Estee Lauder coming in at number 5. Coming in number 4, I had trouble getting to a top 5 stocks. That's why I included Estee Lauder. Amcor, share price was down, so I thought I'd just include this company. They did have the AGM. No, they released results. That's right. And what I'm going to do here is maybe go to Capital Brief. In fact, did they have anything here? Here we go. Amcor lifts quarter-one profit to sell stake in JV. That's not exciting. And Amcor sales remained sluggish during the quarter, hurt by weaker demand for its containers and cartons from consumer goods companies. The company has faced lower customer demand as well as significant destocking in both North America and Europe over the last year. Interim CEO Peter, won't try to pronounce his last name, said volume growth and customer demand dynamics are improving and reaffirmed guidance. In fact, that's the only thing I saw when I saw their results. They reaffirmed guidance. Amcor shares drop on continuing weaker demand. Now, this company is also listed in America. That's why their report is more Americanized. And in aftermarket trading, in fact, I should actually look at that. You would assume it's down. Now, let's have a look at the chart for AMC or Amcor. The chart actually was looking okay, if I remember correctly. Yeah. Well, that's the weekly chart. Actually, in fact, the chart was looking okay and down pretty big today, but we saw a really big down day on the 16th of August. Not that big, down 3%, and then it recovered fairly quickly. But overall, the chart doesn't look that bad. I have no complaints about this chart. An okay dividend yield, I would assume, 4.65%. Yeah, Amcor. Not for me, and plus this company, you can just see by the candlesticks here, it does move based on what happens in the United States. Okay, so that's Amcor coming in number 4. Coming in number 3, a company that had their AGM share price was up at one point today. Yeah, it was up actually not a fair bit, but it was up about maybe 1-2%. Now it's down 3%. They had their AGM. It seemed okay. No complaints with me. I'm not a shareholder of this company, so I didn't have a quick look, but everything seems to be moving in the right direction. They did have some sort of update, and of course, this is going to take 5 years to open up. Thank you, CommSec. So let's go to Market Index. For those who have not seen this before, I'm going to open up the same document in Market Index, and you'll just see how quick it opens in Market Index versus CommSec. This is not my interest. It's virtually open within a split second, within a jiffy, and it's still opening up on CommSec. It's a CommSec issue. It's not an issue, my computer issue. It's a CommSec issue. And the reason I know that is because it happens elsewhere. Okay, and I'll just decrease this a little bit. The font here is a little bit big. What I should do is view it as a PDF. Yeah, that's better. Look at it, open up so quickly. I should open up all announcements via Market Index. And they have sort of a bit of wouldn't call it a training update, but how are things progressing? And it seemed pretty good. I think it was in the presentation where I focused on it because there's just this, let's have a look at the presentation. I did have to go down fair bit. Here we go, trading update. Thankfully, I found it straight away. Sales continue to grow in both USA and Australia in the first quarter. Continued sales growth in both USA, I've just mentioned that. And yeah, it seems like things are still moving in the right direction for Cobram Estate Olives. Financial outlook. Sales outlook remains positive. Strong operating cash flow achieved in the first 3 months of financial year 25, and we expect this to continue throughout the year. This is an on year for Australian groves. We expect the crop to be significantly higher than the financial year 24 Australian harvest. Financial year 25 is an off year in USA groves, so we have a nice balance there. And CBO Group financial year 25 reported EBITDA is expected to be materially higher than financial year 24. So it sounded really good. I liked it. And then I looked at the share price and it was up. So I didn't find that surprising. Now the share price is down. So not sure what's going on there. Maybe a little bit of selling coming in during the day. So let's have a look at the chart. Is this an opportunity to buy this company? Just want to see if the share price, and by the way, I have traded this company before. I will never own this sort of company for the long term because they're agriculture. And overall, the chart is moving in the right direction. In fact, if you have a look at the weekly chart, I reckon this looks better. Yeah, so share price was in a downtrend since they listed back in 2021. Found a bottom about $1.12 in June 2023, and then started to move up. And I think it is in the long-term uptrend. Today, it looks like the share price did get to about $1.96 and has fallen back. That's a very important level. Share price got to about $1.96 back in April. So share price is at a resistance zone, or did get to resistance zone today. Maybe that's why we did see a bit of selling. So that's a breakout level. At $1.96, we'll just say $2 is a breakout level for Cobram Estate. If I see it to get to that level, maybe I'll trade it. Maybe I will. Anyway, other than that, and also have a look at the share price. It has moved into an uptrend in the last few months after looking a little bit weak. So it's moving in the right direction. I was trading this in late 2023 into the middle of last year. Share price was in an uptrend and then just started to go sideways. And then I took profits. Okay, so that's Cobram Estates coming in number 3. Okay, a company called Delorean. I am trading this company right now. It's a small company dealing with renewable energy, that sort of thing. They had been releasing their Appendix 4C, and the market reaction on the last Appendix 4C released in July was really interesting. Now, this company was cash flow positive, profitable, and they've been told by the ASX because they had 4 cash flow positive quarters in a row, you don't have to release your Appendix 4C anymore. In fact, they mentioned it on the 28th of October. So I was actually waiting for this Appendix 4C. I was actually keen to see how they're performing. And then on that particular day, cessation of Appendix 4C lodgement. Not all companies who get this notification from the ASX actually release this sort of announcement. They just don't release their Appendix 4C. They don't tell us. So Delorean wishes to advise that following 4 quarters, 6 consecutive quarters of positive operating cash flow, the ASX has given consent to the company to no longer having to lodge quarterly Appendix 4C reports. Some companies ignore what the ASX says and they continue to release Appendix 4Cs. Fiducian is one of the best examples. They don't have to release Appendix 4C, but every 2 quarters they release Appendix 4C when it falls outside the normal 6 months to yearly report. So they did release an Appendix 4C this particular quarter because it falls outside the, here it is, Appendix 4C, call it an update. But if you go back to July, they didn't release it because that was the end of the financial year and they're going to release their full year results. So nothing in July. I do like that. I do like Fiducian because they release 2 Appendix 4Cs a year and 1 half-year results and 1 full-year results. I like that. The only company that's doing that, Fiducian, and why not have a look at the chart for Fiducian because the chart also looks pretty good. Now, this is a company I have owned for a long time, and I will continue to own this for as long as possible. And the chart looks pretty good. Okay, so that, oh no, Delorean. I thought I finished talking about Delorean. Okay, so Delorean. Why am I talking about Delorean? Share price up. Well, it's up 1 cent. They did release a company update. Well, in this other announcement, they did mention, and one of the reasons I don't like when companies stop reporting or stop releasing Appendix 4Cs is they stop giving us updates. I hate that. You give us updates every 3 quarters or 3 months, and then all of a sudden you just stop giving us updates. I really hate that. And in Delorean's announcement, they did mention the company will continue to make project update releases to the market as and when appropriate to do so. And then lo and behold, this morning, they released a market update. Or, trading update. Company update, we'll call it. And nothing to complain about. And obviously, share price is up, so the market thinks it's okay. So this company is moving in the right direction. Australia's future in bioenergy and renewables, they're in the right sector. This is definitely going to be a pretty significant growth sector in the next, decades at least. And so, what can you say? My only concern, they did mention the cash balance here of $8 million. So I did go back to see whether the cash on hand actually increased or decreased in this quarter. It actually fell a little bit. Now, nothing to be too concerned with because it could be just based off trade receivables and trade payables. Maybe they have a fair bit of cash coming this particular quarter, I don't know. But that's one thing to keep an eye on. What's happening to the cash balances moving forward? But other than that, everything's moving swimmingly well for this company. Talking about renewable gas demand, significant ongoing demand from both government and business sectors for Delorean's renewable natural gas, biomethane product in market. In a market where renewable gas is scarce, etc., etc. Business overview. If you want to know what this company does, have a look at that, because they talk about their 3 interoperable divisions: infrastructure, engineering, and energy retail. I like this particular report from this company. And let's have a look at the charts. The main reason I took a position in Delorean, it's twofold. I do like the financials of this company. They're in the growth sector, that sort of thing. This company could be significantly bigger in 10 years' time. The other thing I liked about this company is the chart. So the share price took off in July, 23rd of July. I believe that was not the pennies 4C. I believe that was just a trading update. Then they released pennies 4C like a week later, and the market had a little bit of a hissy fit. And the share price actually pulled back a fair bit to below 6 cents. And it found a little bit of a floor, and the share price started to increase again. When the share price broke above 10 cents, I really started to pay attention to this company. And then the share price pulled back below 10 cents. I went, ooh, now I've got an opportunity. So I bought some shares at 9.8 cents. And to be honest with you, the chart looks pretty good. No complaints about this chart. Already up 50% in that particular position. And I think there's potential way more upside. Market cap of this company is only $34 million. So but way more potential upside for Delorean. Okay, so let's get to the stock of the day. And the stock of the day is Macquarie Group. They did release their half-year results. Share price down 3.4%. Was down by more than that at one point. Almost 5% at one point. We're in the closing auction, by the way. So the end of the trading week is upon us in the next 4 minutes. And it looks like the share price will go up a little bit. Maybe. Okay, which one should I talk about? Media release. I'll open up the presentation as well. They have a media release. Well, they have the actual report. They have a media release, a presentation, and then a management discussion analysis, 100 pages long. Not sure if I'm going to read that. Now, I had a quick read of their financials, and so profit for the half year up 14% from the half year last year, but down from the second half of last year. So up 14% on previous corresponding period, down 23% on the second half. Now, this company has 4 or 5 divisions, I believe. I'll talk about those divisions in a second. International income, 65% of total income. This is a global company, but still, wouldn't say focused in Australia, but still, 65% global, 35% in Australia, but still Australian. Assets under management, 916.8 billion, up 3% from 30 September 2023, and down 2% from 31st of March 2024. Analyzed return on equity at 9.9% compared with 10.8% in financial year 24. So those who do pay attention to return on equity might get a little bit of a, not sure about 9.9%. And interim dividend of $2.60. Let's have a look at this presentation. So I did quickly go through this. So they do have 4 divisions. So BFS, Banking and Financial Services, Macquarie Asset Management, MAM, Commodities and Global Markets, CGM, and Macquarie Capital. Just below that, in this particular page, they have how much revenue, or actually profit, is attributable to these 4 divisions. So 22% of the company's profit is banking and financial services. I wouldn't expect much growth in that particular sector or that division. Macquarie Asset Management, 23% of profit. In CGM, about 43% of profit. And that's divided into 2 little bits, 8% in legal and governance group, 35% in financial management. So 43% of this company's profit, commodities and global markets, and 12% profit in Macquarie Capital. So they do go through how they measured up in all these different divisions. So, and then more than that as well. Assets under management, Macquarie Asset Management, banking, financial services. Anyway, one of the things I did look at when I saw these results is I just had a quick look at the P ratio or what I'd be willing to pay for this company. I don't think Macquarie Group is as high quality as other investors. And there's reasons behind that, which I won't get into in this particular video. So I just thought, what price would I be willing to pay for Macquarie Group right now? And I got a number well below what the price is right now. So I got a number around about $150 to $160. So, and I don't think the share price is going to fall to those levels. It was actually anytime soon, but the share price was at those levels back this time last year. So if the share price was at that level right now, I'm thinking about buying some shares in this company. So I do think there is definitely an argument that Macquarie Group is a little bit overvalued right now. And the reason why the share price has gone up a fair bit in the last year, yet the financial performance of the company hasn't really grown all that much. Anyway, so that's me talking about Macquarie Group. A nice chart overall, and the share price is in an uptrend, has been in an uptrend since this time last year. In fact, on the 3rd of November last year, share price was a bit volatile that day. That would have been when they released the results. You could have bought shares in Macquarie Group at about $155 that particular day. Now it's $223. So share price has increased 50% in 1 year. I can tell you this much. The company has not increased their financials 50%. So we have seen a little bit of multiple expansion in the past year for this company. Anyway, and the chart still looks good. So no complaints about the chart. Okay, so that's Macquarie Group coming in number one, the top stock of the day, or just the stock of the day. Now I'm just going to have a look at some of your comments. A little bit of time on my hands. Josh Streams Dean says, if everything in XGO gets cut by half. Okay, you mean BY, not BUI. So if everything in XGO gets cut by half, what would you buy? So if you're saying that every single company on the ASX gets cut in half, so that's what you're saying, every single company. Well, I'm not sure. I definitely would have I would probably look at the higher quality companies. So for instance, Macquarie Group, maybe not, because there's going to be other companies I'd like more than Macquarie Group that if their share price is halved, I would like. So there would be, I'm just having a quick look at some of my companies I do own. Tech, no, where is it? If CSL got cut in half, I would buy that every single day. So we're talking about share price of $140. And if you look at CSL right now, the PE ratio of CSL is, what is it? It's 34, which means the PE ratio would be 17. That's ridiculous for this type of company. What else is here? What else? So CSL would definitely be on that list. Like a company like Pro Medicus has a PE ratio of like 200. So even if it gets cut in half, it's still got a really high PE ratio. In fact, it would be 123. REA Group, Technology One. A lot of these companies have really, I wouldn't say overvalued, but they would still be richly valued even if the share price got cut in half, which is a weird thing to say. Ordinate, I'd be interested in Ordinate if it halved from here. That would mean the share price would be like $4, $4.50. Yeah, interesting. What do you call it? Thought exercise. If every single company on the ASX or XGO got cut in half, which companies would I buy? And maybe those are the companies you should be thinking about buying right now. Thought exercise. What I'm going to do is I'm going to go back a few days. So I do like to filter here, response status. I haven't responded, apply. Because there was a few comments I didn't respond that I really wanted to talk about. And I'm going to completely go past it. Okay, so this is from Sensei It Is. What were your biggest top 5 stocks? Or top 10 if you want to share that made you the most profit-wise? Is Findy in that top 5 or no? Okay, top 5 stocks. I don't know. So Findy is in the top 5. It could be almost number 1. A company called Biggin is near the top, and that's a sad story because I still remember this. It was a 10-bagger for me. And I remember talking to a colleague, and it wouldn't be a friend, it would be acquaintance. And I just said, I just don't understand how this company makes money. But if you looked at their pennies for seats, this company was creating cash like nothing else. And I just went, I just don't understand it, because they had they would go into they'd take videos of businesses, and that's how they would make money. I just didn't understand the business model. And this person said, if you don't understand it, just take profits, just sell it. And I almost completely took profits, and then it was a fraud. The company was a fraud, big hoo-ha about it. If you've never heard of this company, this was back in 2018, maybe? Biggin company. Here we go. ex-CEO failed company Biggin on insider trading charges. Oh, I didn't know this. I didn't know the former CFO limited charge with insider trading. Hooked on a Biggin, how the listed tech company. I'm pretty sure when it eventually was found to be dodgy, the company still had a market cap of like 350 million because they were in a trading hold. So they delisted, I can't remember when, 2018. Yeah, they were put into administration and delisted 2018. And that was a really important lesson because I just didn't understand how they made money. And all I was looking at was the cash flow statements, and this company was just creating cash like nothing else. And there was a reason behind that, and it was really a dodgy reason. And so the lesson I learned is the financial statements can lie. Companies can manipulate the financial statements to look like they're doing way better than they actually are. So that's a very important lesson. In fact, not only that, there was a podcast that was just put onto my feed, which talking about the same sort of thing. Where is it? Here it is. This is We Study Billionaires. Quality of earnings. This is TIP episode 672. Quality of earnings, uncovering hidden red flags with Clay Fick. Many investors who analyze stocks take the numbers provided by the company at face value, but there are times when this can be a massive investing mistake. And that is the one thing I learned with Biggin. So even though it's one of my biggest performers, I learned a big lesson. Now, I lost a little bit of money because I didn't completely sell out, but I did take a massive profit. Otherwise, REA Group would be one of the biggest, my biggest wins, I suppose, because I held that from 2014 to 2022. Share price went like a rocket. What else is there? I would say Neuropharmaceuticals, Telix is heading that way. A company called LBT Innovations. I held that company from 10 cents to $1. Actually, it was like 15 cents to $1. And then I sold at the top. That was my best ever timing. I sold when the share price got to $1. That was my aim. And then that was the high. Share price has dropped all the way back down to like 4 cents, I think. LBT Innovations, 1.4 cents. Oh, geez. Yeah, I'm going to show you the chart of this one. This was definitely one where I did have a plan. This plan worked out to perfection. So they received FDA approval for their products, APAS or something, and the share price went bananas in like a few trading days. So I was actually adding to my position, continually adding to my position. So I had a fairly large position in LBT Innovations. I think my average price would have been 15 cents. So just before the share price went bonkers, the share price was about 12 cents. So I was actually in the red. And the share price went from 12 cents to a high of $1. It doesn't say $1 here, but it went to $1 because I sold at $1. So they must have done some sort of consolidation or something. And that was the high. You can see the share price in consecutive days rose 94%. In consecutive days rose 95%, 95%, and then 2 days later rose 31%. And then I sold on the 5th trading day when the share price got to my level. So that was a pretty big gainer. So those are probably my biggest top 5 stocks. So definitely Biggin, definitely Findy. I think EZZ Life Sciences is getting to that point. And this company, LBT Innovations, REA Group, yeah. There's another one here. Just James Dean says, how would you size position for a 10 bagger? This is an interesting one because, yeah, Findy is a 10 bagger for me, and I have taken profits, and it's going to ride it the rest of the way. Now, funny enough, even though it's a 10 bagger and it's still a large position in my portfolio, it's not a massive position. So it's only like 5% of my total portfolio. But if I see the percentage of a position getting to like 10%, 15%, 20%, and I am not concerned, but I don't think it's the highest quality company, and I would never say Findy is a high quality company. I definitely would take profits because you never know what's going to happen. But if the share price keeps going up, you just ride your winners as long as possible. But then again, Biggin just shows you what happened there. One dodgy thing that could happen, and the share price could drop a significant amount. Now, with Biggin, there was a lot of time before there was signs of it being a fraud, and then when they went into training hold, there was a lot of time. So definitely there was maybe a week or 2 week period where you had time to sell out. But there was a lot of people saying, no. AFR, what's his name? Jonathan Shapiro were over exaggerating. It's not as bad as it seems. And yeah, so I think it's dependent on the position, dependent on what, if it was say Alphabet or Amazon, or maybe not Amazon, Alphabet or Microsoft, if my position in any of those companies got to 10, 15%, I probably wouldn't mind. So it all depends on the company. If I had 15% in a mining exploring company, well, definitely in that sort of situation, I would want to take profits. Now, that's just me. Now, if you listen to Andrew Page on Motley Fool, he bought Pro Medicus. Was it below $1? And he took profits all along the way. And then I remember listening to an episode, he said if he didn't take profits, he'd be a multi-millionaire by now. Yeah, and he hated, anyway. I wouldn't say he fell apart, but anyway. Yeah, Kneppy investigates. Kneppy invests. Oh, thank you. Let's go back up to the top because I completely went by Ben Hutchinson, who says, hi, Kneppy. Frontier Digital mentions, I got impression quality revenue growth was quite weak. I can see that. Still, actually, as you said that, I am remembering the document I did read, and I was like, because I talked about LATAM. Let's have a look. Because I talked about LATAM and how well it's done, and then there was one particular little bit of one slide in there. Of course, it's going to take 5 years to open up. Thank you very much. Hello, anyone home? Market index. I might as well just wait for this. And I just noticed that when you looked at the last 4 or 5 quarters for LATAM, LATAM, Latin America, there wasn't much growth there. I was like, what? Not much growth here. See if I can find it. No, it wasn't that one. Yeah, it was this one. So LATAM trading update. And they were just talking about how well this has been doing. And this is LATAM revenue. So the last 5 quarters. It's just nothing. There's no growth. I was like, okay, that's interesting. EBITDA, not much growth there. So as soon as you mention that, where are you, Ben Hutchinson? Yeah, that's just triggered my memory. Still not reaching the hopes we all had for this business. It's taking age to make a profit. Yeah, well said, Ben Hutchinson. Your thoughts on IDA? Thanks. IDA, I have no thoughts on IDA because I have no idea. Is this Indiana something? Indiana Resources. Yes. For some reason, IDA, Indiana Resources. Just because I know the name of the company doesn't mean I know anything about the company. It's just a ticker code. For some reason, it just triggered some reason somewhere in my brain, IDA, Indiana. I didn't know there was Indiana Resources, however. Nothing. Oh, is this the company that's receiving a lot of money from Tanzania? They won a court case or something. Is this that company? I can't remember. So they just received $25 million from Tanzania, $25 million US dollars from Tanzania. So they do have a fair bit of cash on hand, I would assume. 25 million. Oh, that's right. Yeah. Second installment of the $90 million settlement announced on 29th of July. I sort of do have a vague memory of that particular thing. Now, that's all I know for this company. Update on cash position, intercompany loan. So how much cash do they have? They must have a plethora of cash. Total cash, 47 million held by Indiana, 6 million US held by Nakana Nickel Holdings. What are they going to do with all this cash? Yeah, I don't know. That's all I know about this company. That's it. Let's have a look at the chart. Indiana Resources. And I was going to say, that can't be the right chart. Okay, the chart doesn't look that bad. And, you know, if I knew nothing about this company, which I don't, and I just saw this chart, I'd be like, it's not a bad looking chart. Indiana Resources. And maybe that's the way to play it. You don't have to know anything about the chart. Or you don't have to know anything about a company to just trade the chart. Just trade the chart. A nice little support level at about 7.5 cents. Yeah, that's pretty obvious. So it's well above that right now. Yeah, and it's gone above 10 cents. That, a lot of times, is a very natural resistance level, and it's gone above 10 cents on strength. So you can see it tried to get above 10 cents a few days, and it failed, and it's finally got above 10 cents. So I have no complaints about the chart, but I know nothing about the company. You probably know way more than I do. Sensei says, did you have a haircut? And then your Friedman said it was the first thing he said in the video. Yes, it was. Actually, no, technically it wasn't. Technically, I said, welcome to Kneppy Invest. That's the first thing I said in the video. So, in a way, your Friedman, you are a little bit wrong. Technically, you're wrong. Possible breakout. PointsBet. Well, I just talked about PointsBet, didn't I? So, have a look for that in this video. And I'll talk about read books or books to read in a standalone video, because I do get quite a few questions about this. Just James Dean feels like XJO is ready for a pullback. Buyers are no longer ready to pay a ridiculous amount for Woolworths. Yes, so let's have a look at the XJO. Let's have a look-see, because I can definitely see how someone could be thinking this. So we have gone now below the top of the trading range. Now, in saying that, there was a nice little support level at 8,100. And today, on Friday, the 1st of November, the price, or the XJO, did fall below that support level for a brief period, and then has gone above it. In fact, if you look at the 5-minute chart, we can see how long it stayed below it. It's, well, actually stayed below for quite a bit of the day. It went below on open and then rose above that level at about 1:30. So about 4 or 5 hours it was below. But nice little rally late in the day for the XJO. Now, if you look at the daily chart, we've had 3 big down days in the last 2 and a bit weeks, but we've had no big up days. So the big days are winning out over the down days or the up days. And if that keeps on happening, naturally enough, the market will fall. If the big days are worse than if the down days by percentage change are bigger than the up days by percentage change, you will see the market drop. But at this moment, it's just heading down. I'm not that nervous just yet, because overall, the market is still going up. But I can definitely see why some people might be a little bit nervous. And the second point here, buyers are no longer ready to pay a ridiculous amount for Woolworths. Well, yeah, I just don't understand why people, even at $30, were wanting to buy Woolworths. I heard that a lot on Ausbiz the course. $30, it's pretty good value here. No, it's not. Our share price is now below $30. It's not good value at those levels. I don't understand why people think this is good value. Sure, it's offensive, but it's so overvalued. That's just my thoughts, by the way. Oh, Lily says, would you be interested in sharing your personal portfolio picks and why you chose them? I'm keen for an episode of that. I have done an episode on that, by the way, Lily. Yes, I have. Top 20 holdings. Here it is, my top 20 holdings as of May 27, 2024. So have a look for that video. You can see my top 20 holdings, and I don't think it's changed all that much. Or maybe a few have changed, but positioning-wise. But a lot of these companies are American-based, the bigger companies, that sort of thing. So have a look at that. If you want more maybe not more information, but those are my top 20 holdings. So have a look at that video. 52 minutes long. And I'm pretty sure I go into reasons why. Hmm. Oh, you're Friedman. What percentage of your total capital do you put into stocks you're speculating on, such as Star Entertainment Group? Really small. And when I say small, I mean small. And I'm just thinking of percentage. So, for instance, with a really speculative play like Star, I've got a little bit more in Star than some of the other ones, but I have about 4 or 5 speculative stocks. But I usually don't want any more than that. And I would consider Star to be speculative. And yeah, the reason I'm just nervous about Star. So I would put in overall. I'm going to do this by myself. I'm going to do a calculation. It's not 1%. No, it's not 1%. If it was 1%, we're talking about 0.1%. Yes, 0.1%. So altogether, my speculative stocks are about 0.5% on my complete portfolio. And so when they totally go bust, I don't really care because it's a very small part of my portfolio. And when I do see them succeed, I go, well, whatever. Anyway. And this will be my last question. Your Freeman, sorry, Rick Thelium. Would you mind defining stock of the day for us? It seems a small portion of the stocks of the day are actually bad. I have no definition. I just go through announcements, then I just come up with the top 5 stocks. There's no rhyme or reasoning behind it. If it is swayed to the positive parts, positive announcements, positive stories, positive companies, then that's probably, I wouldn't say coincidence, but I do like to be more positive than negative. But if a company does drop by 40% and nothing else is really good on the ASX, then more likely I would have that company as a stock of the day. Okay, and that's it for today's video. If you have any questions, any thoughts, leave those in the comment section of this particular video. Otherwise, that's it for this week. And I should also mention, I am not a financial advisor. So if you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.